Though investment could be a key factor for the survival of a startup company, the profit model and market environment could be vital determinators of the midterm and long-term development of a company as well. Let's find out.
And now, Apple Pay is also available on Ping++. If a client wants to add the payment client to its platform, Ping++ can make it happen in less than an hour. Ping++ customer base has expanded from just over 100 small to medium-sized companies in 2014 to nearly 7,000 by early this year.
因为正好是资本寒冬，我们启动整个第二轮融资时候是6月份。
We launched our second round in June last year when the capital market was really in a tailspin, and other funds started investing all at once. People will find during the second half of last year that investments were becoming smaller. Our timing was really poor. Life is like this. The first time was really smooth, but the second time was quite hard.
Ping++ aims to boost its customer base to 50,000 by the end of this year. It's a goal that's presenting the company with some thorny challenges.
当你客户会量很小的时候，你是
When you have a smaller number of users, you hardly notice problems in your team. But during the past 3 months, our customers have increased so much, and we feel more pressure in daily operations. We need to hire more talent, provide more training, and make changes to our management system. Even figuring out how to reward our staff is more complicated now.
激励，这就变得非常复杂了。
The company plans to double the number of its employees from about 50 now to more than 100 and make changes in how it earns revenue.
So, Professor Jia, in the short term, Ping++ is not making any money, but what's the long-term revenue model for this company?
It's an interesting question because a lot of startup companies, they all have the challenge of finding a sustainable revenue model. So as you mentioned, Tracy, at this point, Ping++ is also one of those millions of companies who are not making any revenues. But going forward, so that's why they need to raise venture capital money, to basically finance their spendings. But going forward, I think one option is to generate revenue from value-added services. So for example, they now have all the transaction records, right, for each partners. So what they can do is they can try to match, the financial status, the cash flows with some kind of investment or fundraising opportunities. So for example, depending on the cash flow, inflow and outflow status of this company, they can help match this company with, a bank, who are willing to, for example, lend the money to this company and etc. Right? So that's one option, and they can earn sort of commission in between. An alternative option is to provide sort of customized service for bigger companies. It's going to be difficult to make profit on small clients, but for these sort of large clients with deeper pockets and who are willing to pay more, they can provide more customized service and just try to earn money, from there.
And all the business they do on their platform could be used as part of their database, and these data are very, very valuable as well.
So the big data idea, right? Everyone talks about. Yeah, potentially that's another alternative source of revenue going forward.
Professor Jia, we have talked a lot about many B2C business on our show, but this is a B2B sector, business to business. Recently, a lot of venture capital funds started putting money into this sector, including a very reputable one such as Sequoia. Sequoia, from what I understand, actually invested money in Ping++ as well. So what is making this business to business sector so attractive right now?
Right, you're absolutely right, Tracy. I think the 2B market is making a comeback. It used to be for the last few years, the 2C market is sort of the focus market from VC investors' perspective. All they want to invest in is the 2C market because that market had a lot of potential. It was the blue ocean at the time, so there were a lot of investment opportunities. But it's interesting, over the last couple of years, we're seeing a comeback in the 2B market. So the investors are gradually shifting their attention away from the 2C market, and they start to look at more, at the 2B market. And I think there are several reasons for it. One is the fact that, if you look at the 2B business, we're dealing with rising labor costs in China. China is losing, unfortunately, demographic dividend. So the businesses are actually increasingly more concerned about enhancing their operation efficiency. Right? So any business that can help them streamline their operations, enhance their operation efficiency, will be very attractive and will have a huge potential going forward. So for example, HR management, right, CRM, customer relationship management, this kind of software, enterprise software, will become very popular. I think that's the number one reason. The second reason is now with this entrepreneurship environment in China, right, we're seeing a lot more small startup companies, and as small business, they need a lot of external support, right, including some functional support, right. So company who can help them, outsource, some of the functional area, I think that will be also very promising from investors' perspective. And the third reason is obviously the 2C market is getting very crowded. It's no longer a blue ocean. As we just talked about, BAT is pretty much everywhere in the 2B market.
That's right.
It's actually very, very difficult to find a high quality deal with reasonable valuation, right? So high quality deal is already rare, and then plus a lot of the deals are being overvalued. So investors basically, they need to identify the next blue ocean. So the 2B market in some sense is that next blue ocean. Right?
Some have also said that the 2B market is easier to turn cash around to actually get a return on your investment, given that you're dealing with business and institutions instead of individual consumers.
That's a great point, Tracy, because the 2B market for business, they have higher paying capability, right?
That's right.
And unlike 2C market, you have to heavily subsidize users. Basically you offer your products and service for free, so it's really hard to turn around in terms of your financial performance. But 2B market is definitely much better in that sense. I agree.
Professor Jia, there's this concern among lots of experts in China saying that BAT, the three giants of internet industry, are growing too big, and they are sort of dominating every single sector and sort of stifling the growth of other smaller companies. What do you think about this trend, and also do you think BAT will actually dominate the B2B market in China in the future as well?
Right. It's an interesting debate, Tracy. I think in the 2C market, B2C market, BAT, Baidu, Alibaba, and Tencent, undoubtedly they have a leg up, over smaller competitors. Just look at, this year their strategic plans. They're basically going into a variety of different industry, right? They used to be operating only online, but now they're penetrating and hoping to revamp, all the traditional industries. So I think in the 2C market, they certainly have a monopoly advantage. But the 2B market is slightly different because what makes them so successful in the 2C market is their brand, right? So for example, Alibaba has this significant brand premium, so that based on the large number of users, based on this brand loyalty, they can basically sell their customers everything, right? So anything they want, which is actually pretty easy to do in the 2C market. But the 2C market, the clients are not individuals, right? They are institutions. So for them, the decision making is more rational in some sense, right? So they have to care about not only the brand, but they also care about the price, right? The kind of service you offer, the quality of service you offer. So they basically try to factor all these into their decisions. So it's a comprehensive decision-making process. So that's why I think in the 2B market, the smaller company in the niche area who have who provide high quality service may actually have a chance to win out.
So you're saying the customer stickiness is definitely less intense in the B2B market, given that if you can provide a product at a cheaper price, your business partners will have no problem switching. They have no brand loyalty in that sense compared to a regular
Well, they do
consumer.
have brand loyalty, but it's just less so compared to the 2C, individuals. Because in some sense, when it comes to consumers can be irrational sometimes in their decision making.
Talking
right?
about women shopping, right?
Right, exactly. They go for the branding, they go for the big company name. But for when it comes to 2B market, when the clients are companies, small business, they're more rational. Right.
That makes a lot of sense. Thank you.